All right. Good evening, everybody. Good evening. I'm so glad to see everybody. I'm so excited for tonight. This is a big day for me, man. A lot of great speakers have come to bless the wealth mindset and real estate stage, but none like the one that we have this evening. So we're all in for a treat this evening to learn from our guest speaker, who I'll introduce in a moment. Before I get into that, just for those of you who are watching live now, or for those of you who are watching on the recording that we'll post on our YouTube channel and spread across social media, my name is Chris Price. I'm the host of the Wealth Mindset and Real Estate Investing Meetup. I'm also the CEO and co-founder of Red Fox Multifamily. Tonight's speaker is none other than Clive Davis. He's going to talk to us tonight about, going from a extremely successful corporate executive to real estate investing. And Clive is going to unveil his transformative journey. So I know, like you, I'm looking forward to hearing and listening to this and seeing this. I'm a bit familiar, maybe more than some that are on the line, but I'm sure you all are going to be in for a treat this evening. Before we get into that, let's take a little bit of a brief commercial break to tell you a little bit about our sponsors. So, the Wealth Mindset and Real Estate Investing Meetup is open to all who are interested in growing generational wealth and passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in the group make a good living and have discretionary income to invest in real estate for its proven wealth building power, but don't have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate investments. And we're sponsored by Red Fox Multifamily. And Red Fox Multifamily helps pharmaceutical and life science industry professionals diversify their portfolios, add passive income, and get all the other perks of real estate investing without having to do any of the work themselves. Red Fox Multifamily partners with passive investors to buy commercial multifamily real estate based on vetted opportunities. We get access to from our trusted network, top operators in the best markets throughout the country. Partnering with Red Fox Multifamily makes investing in real estate completely hands-off, allowing investors to add passive income, build equity, and save on taxes, all while being in an investment vehicle that is backed by a hard asset. So that's enough about the sponsor and the meetup tonight. And again, thank you all for taking the time to be here. Let me just admit the next guest here. I want to make sure that we take a moment here just to go through a little bit of the logistics. So for those of you on the line, please mute your lines when you're not speaking. Hold your questions to the end of the presentation unless our speaker invites you to ask questions along the way. Also, if you could, this material, this presentation is being recorded, as I mentioned earlier. This material does not constitute an offer or a solicitation to purchase securities. And please note that this is for information purposes only. It should not be construed as business, financial, or legal advice. And so, of course, I always like to connect with those of you who are watching live, or for those of you who are watching on the recording on YouTube. I'm always down to connect and just get to know people, talk about real estate, talk about business, entrepreneurship, wealth mindset, as the name of the meetup is. Just continue to grow and connect with each other. Please reach out to me via email, chris@redfoxmultifamily.com, or you may scan the QR code for my contact information and schedule a call. We can talk. So for tonight, we are going to go through, and I realize that I'm not sharing my screen here. Pardon me, guys. Go ahead and share. It's my mistake. Now you should be able to see my screen. So you should be seeing my screen now. So look, tonight I'm going to go quickly through the speaker introduction. I'm also going to hand it over to our speaker for the presentation, a little Q&A, and some virtual networking for those who are able to hang back for a few minutes. So without further ado, let me go ahead and introduce tonight's guest speaker. Tonight's guest speaker is Clive Davis, who he has a passion for sharing his real estate investing journey and experience, and we're going to get some of that tonight. Clive, his journey started in New York's corporate law scene before conquering pharmaceutical compliance. Now he is a real estate powerhouse with over $135 million in assets managed in a groundbreaking project on the horizon, which I know we'll talk a little bit about this evening. Park Royal Capital is the name of his firm. It is a private equity real estate investment firm that offers busy professionals and business owners seeking diversification beyond the stock and bond market the opportunity to privately co-invest in large-scale multifamily investment opportunities, offering solid returns and tax benefits. So without further ado, let me introduce Clive. Clive, I will say before I hand it over to him for his presentation, just so I can help everyone know how's the connection. Look, I had the opportunity to connect with Clive virtually. Actually, I've been following a lot of the work that he had been doing. I've been a part or in the realm of some of the networks that he runs with, and in those communities, I've been able to be exposed to the different opportunities that he has, the different activity that he has going on his newsletter, following his journey, his speaking engagements, you name it. This man is everywhere. He's done so many different things. When I look back at this as we lead up to this meeting, think about the success that Clive has had and all of the accomplishments that he's had as from academia to now to going into being an accomplished corporate attorney for one of the world's most successful businesses, let alone pharmaceutical companies in the world, and having that success. And many people would say, man, that's quite a remarkable career. What more could you do? I'm not even talking about his family and all the other things that he's going on. I'm just speaking to some of his professional accomplishments, his academic accomplishments, which are absolutely remarkable. And like I said, many would say that what a fine job that is, but he did not stop there. He's gone on to create, as I just mentioned, an amazing real estate portfolio. And in addition to that, he's bringing others on the journey. He's educating us all, helping us all get knowledge and learn to be able to connect and build our wealth as well. And I think you guys are going to be in for a treat tonight to learn from him. He's not only a successful real estate investor, as I know we'll talk about, he's now entering into the realm of real estate development, which is remarkable. He's an accomplished speaker, as I mentioned, speaking on many big stages in this real estate game, which is just so important to continue to not only share information, but and by helping others grow, whether those are in other industry professionals, folks outside of the industry, like all of us who are learning how to invest. This is just a great opportunity. So where do you go from here? I think we have an opportunity to listen to Clive tonight to talk a little bit about this. So Clive, I'll hand it over to you to go ahead and take us through your presentation. So thank you for being here.
Thanks for having me, Chris. That is easily the best introduction I've ever had. I'm sitting here thinking, wow, whoever he's talking about, that guy sounds impressive. No, but I appreciate you giving me an opportunity to share your platform and share with your group. It's rewarding to be able to kind of share my journey in the hopes that it might be beneficial to others who are at a different stage in their own journey. So, excuse me. So I'm going to rely on you, Chris, to kind of manage me in terms of time allocation what have you, because if you wind me up as well as you just wound me up, I can go very long and very far. And so you know your group better than me. So I request that you kind of steer me in the direction of the things that you want me to really emphasize and drill down on. This is an intimate group, so we don't need to be overly formal. If there are questions, you don't need to wait until the end. If there's a question related to something that I'm saying, I'm happy to address it. So with that, Chris, do you want me to kind of just share an overview of my journey and then fast forward to kind of how I made the transition? And does that align with your expectations?
That is in line with my expectations. Helping the people understand your journey from corporate America, your real estate investing journey, which I also am familiar with that you have, and those little gems that along the way, and then the discovery of multifamily real estate and how you entered into this space, and not only entered into it, but then to amass a portfolio of assets under management of $135 million. How does one even do that with again, with all of these things going on? So I'd love for you to speak to that, and then yes, absolutely, we'll make sure that we cover off on some of the other important developments that I know you have going on.
All right. So as Chris mentioned, I had a 20-year corporate career. I started out in New York City as a corporate transactional lawyer with a Wall Street firm servicing the investment banking world and by extension their clients. So I had the privilege of working for the likes of Morgan Stanley on a regular basis, Ford Motor Company, when they did their IPO of their parts division, Visteon. So I got some really world-class exposure as a junior corporate transactional lawyer right out of law school. And I did that for several years. I rotated through M&A or mergers and acquisitions. I did some general banking. I did a little bit of real estate. And ultimately, I assigned to the capital markets group. And so I was a capital markets attorney or securities attorney doing debt and equity offerings for Fortune 100, Fortune 500 companies. And so that's kind of how I got my start. And several years into that, I made the transition to become an in-house counsel for Pfizer. And they happened to be about a block or two away from where the law firm was that I was working, so I didn't have to go far. But that's what I kind of point to as the first lifestyle professional transition that I made, because when you work as a corporate transactional lawyer at these white shoe firms, you go into it with your eyes open, knowing that an 80-hour week is not going to be remarkable. That is going to likely be more often the norm. And so the first transition that I made, or kind of, conscious decision I made, was that while I'm surrounded by these individuals who are by any measure deemed to be successful, they're all kind of millionaire partners. But very quickly, I decided that I did not aspire to have the life or the lifestyle that these people had. And so I was already looking for, okay, what's going to be my exit? Because this isn't something I want to be doing in 20 or 30 years. And so the transition into Pfizer and the entry into the pharmaceutical industry was with the mindset of, as in-house counsel, my life is going to be a little bit more predictable. And not as fast-paced, not as hard-charging as the 80 hours that I was putting in as a corporate transactional lawyer. So I went to Pfizer, and I got to do a number of things. I was brand new to the pharmaceutical industry. At one point, I was the lawyer supporting Lipitor. At the time I was doing that, Lipitor was the #1 selling pharmaceutical drug in the world. And so got to work on that, as well as several other products. I got to support their import-export group. When you're dealing with a company like Pfizer with kind of a global footprint, import and export of materials and goods and what have you, that's a big part of the business. So I just got some broad-based experience there. And then Pfizer actually gave me an opportunity to relocate to Atlanta from New York. The first time they came to me, I said, thanks, but no thanks. I just assumed there's no way my wife was going to kind of leave New Jersey and where all of her family and siblings were at the time, mom and what have you. So I don't even think I ran it by her the first time they came to me. Fast forward a year later, they came back to me and they said, the position that we wanted to speak to you about a year ago, it's now available again, and would you consider it? So the short story is I ran it by the wife the second time, and to my surprise, after some quick caucusing amongst her family, siblings and mom, she said, let's do it. And so that's how we transitioned from New York to Atlanta in 2005. We've now been in Atlanta for 18 years. I continued on with Pfizer for an additional 2 years after relocating, and then I left them to become a chief compliance officer for a Belgian pharmaceutical company, UCB. The name isn't as well known, but their products, Zysol and Zyrtec, and those are some of their well-known over-the-counter products. And I was the chief compliance officer for them for a total of 9 years, supporting their Americas business. And for them, their Americas business is the U.S., Canada, Mexico, and Brazil. So I was responsible for those locations, that region. At the end of 2016, I decided, okay, 20 years is enough. If not now, when? And the question that I was asking myself is, hey, Clive, throughout the entirety of those 20 years, you've been invested in real estate. I was a small-time landlord. I owned a place in New York. I owned a duplex down in Florida. I'd always been a landlord throughout those 20 years, but it was something that was more of a hobby to me as opposed to something I was doing as a professional investor. So I wasn't as disciplined as I now am, now that I'm managing. I have a fiduciary responsibility to my investors, and so I take this very seriously, and I treat it with the same level of professionalism that I did when I was a W-2 corporate employee. But for those 20 years, I always had an interest in real estate, and that really, I probably trace that back to my early teens. My parents owned a rental property in Queens, New York. We lived in New Jersey. And on the weekends, I would drive with my father. I'd accompany him, and we were the handyman for that property. So, if it was turn-in, in between tenants, I was assisting with wallpapering, whatever handyman things needed to be done to get it ready for the next tenant. That's just what we did. And we would, my father and I, we would stay in the house, in a sleeping bag, because at that point it's an empty house, and we would do whatever painting. We'd make runs to Home Depot, and we would knock out as much as we could on the weekends. And so I did that. That was my first exposure to rental property and property that is property you're holding for investment and not to reside in. And that probably has influenced kind of my interest in real estate from those very early ages. So as a corporate lawyer, a couple years in, my parents had retired to Florida. One of the first things, investments that I made was to buy a duplex in the very community that they had relocated to and retired into. And my thought process was, okay, I'm going to acquire this duplex property. What I ended up doing was I opened up a checking account. I put both my parents' names on that checking account. I had the rents going into that checking account. And fortunately, I was blessed to be well compensated in what I was doing back in New York, such that I didn't need to pull money from that account. So I set up that account basically as a a fund that they had access to. So anything that they needed, if the hot water heater went or the pool pump went or whatever, they could just go access that account. And that was my way of subsidizing them in retirement. So that's my very first real estate investment. I bought that in 1999 and I held that all the way up until 2018. So a very long-term investment. I didn't, when I mentioned that it was more of a hobby than kind of professionally done. I didn't go into that with kind of an exit plan. Anything I acquire today, I go in with an exit plan. There's a business plan that I've articulated, and we're executing against that business plan. And there's always an exit plan. So that's kind of the shift from it being more hobby-like to being more professionally managed. So that was my first investment. Again, held that throughout the entirety of my corporate career. When I relocated from New York, I kept that apartment in New York. And so you may recall that a few years ago, Amazon was thinking about placing its HQ2, its headquarters in Long Island City, New York. Well, the place that they were going to place that was adjacent to my apartment building. And so obviously I was watching that whole episode play out, very much anticipating what the significance of Amazon placing its HQ2 next to my building was going to do. In any event, that fell apart. They ended up in Arlington, Virginia. But nonetheless, I continue to hold that investment. It's an investment that I've told my kids, you will inherit this. It's a piece of New York City. Not a lot of people get an opportunity to own a piece of real estate in New York City. And that property continues to do very well. The first thing I did when I left corporate in 2016 was I went and bought a 5-unit in the very community that I had the duplex. And so the significance of me buying a 5-unit is that, as you know, Chris, 5 units and above qualifies as commercial, as differentiated from residential, which is 1 to 4 units. The significance of that to me at the time is that for the very first time in my adult life, I now no longer had a W-2. So anyone that's done any real estate knows that when you walk into a bank or you apply, the two things they're going to ask you for, if it's a residential property, 1 to 4 units, are 2 years of tax returns and pay stubs covering the last 30 days. And if you don't have either of those, they're going to ask you the same question 2 or 3 times in 2 or 3 different ways, but trying to get the same answer. And so, again, for the first time, I no longer had a W-2. And so I no longer fit into that traditional lending box. And so thinking about a 5-unit put me in a position where, okay, I can go get a 5-unit as long as I have the deposit, the closing funds that I'm going to need to show up with. That's all I need to worry about. So when I went to get that 5-unit, I don't even think they asked me what I did for a living. I don't think they asked me if I had a job, because they are looking at that 5-unit or above as a business that generates revenue that they can assess and make a determination as to whether or not it's a good risk for them based upon the current rents, hearing what the business plan is, doing their own analysis of what the market will bear in terms of rents relative to the current in-place rents, and they make their decision based on that. So the business or the property, they're evaluating that primarily, and then they're secondarily taking a look at me. And yes, they may run a check to see, have I, filed bankruptcy within the last number of years or what have you, but my income is not a deciding factor to them as to whether or not they're going to loan on that business or loan on that property. So that was kind of the first revelation for me that, oh, I can go buy commercial, but I'm going to have a hard time refinancing my own personal residence or going and buying another duplex or buying a triplex or a fourplex. But if I play in this world of commercial, I can go as big as I can go, And if I want to go bigger, I can partner with others. If I want to go real big, I can play with other people's money and have them invest in the opportunities that I bring to them. So that was kind of the first light bulb for me, recognizing that, okay, I don't fit in that box, but the positive of that is that I can go much bigger if I play in the commercial space. So that was the first thing I did. So I left at the very end of 16 corporate. By April of 2017, I had sourced and acquired a 5-unit property down in Southwest Florida. And so I ended up holding that property from 2017 till March 31st of 2020. So basically 2 weeks into COVID, I sold that 5-unit, did very well with it. That was kind of my proof of concept as to, do you really want to be doing this commercial stuff? Do you really want to be rolling your sleeves up and getting involved? And the answer was absolutely. And so, and I went through a lot kind of with that 5-unit, from evicting a hoarder to gut renovating 1 unit that had a smoker in it for like 27 years, to renovate, more lightly renovating other units. So it gave me a lot of kind of the tools and forced me to exercise a lot of the muscles that you're going to need to, whether it's a 5-unit, a 20-unit, a 50-unit. And the beauty of it is that I was self-managing. So whereas the properties that I'm involved in today, I don't self-manage. We hire that out to a third-party professional property manager, and I'm asset managing, which is essentially overseeing the third-party property manager, ensuring that our business plan is being implemented. So in any event, I did the 5-unit, ended up selling it, did well on that, and said, that's the last small multifamily I'm going to acquire. Anything I do after this point is going to be of a much bigger scale. And so even before I sold that, I was on a journey of trying to discover, how do, the apartment communities that you drive by every day, how does one get to a point of being able to acquire one of those and say that I'm a partner or a sponsor and an owner of these scale communities? So I started attending in-person multifamily conferences. All of this is pre-COVID. I started listening to podcasts on a daily basis. Before 2016, I don't think I had listened to any podcasts of any kind. And then I went from that to, now I'm listening to podcasts on a daily basis, sometimes 2, sometimes 3 podcast episodes. I'm soaking in information. I'm now attending these conferences. When I was in corporate, I don't think I attended any conferences that were unrelated to what I was being paid as a W-2 employee. And now, for the first time, I'm attending conferences that are directly related to what I aspire to do. So selfishly, I'm attending this because I think this is going to help me get closer to my goal. So the whole mindset is changing, even with respect to networking. I will say, Chris, for the entirety of my 20 years, I didn't think that networking was that essential to me being successful in my role. I may have been mistaken in that, or maybe I would have climbed the ladder quicker or higher had I been more efficient in networking. But I had teams of 15 plus people reporting into me, kind of around the U.S., around that region, that America's region that I mentioned to you, and I was really just focused on empowering my team, supporting my team, optimizing them. And, the corporate politics and the networking that, some do really well, that was just not something I was drawn to. When I transitioned to real estate and stepped out of that world, my whole mindset shifted about the importance of networking. And you get to a place very quickly where you realize that unless you embrace networking and attribute the right level of importance to it, you are not going to be successful in the world of real estate investing, especially commercial real estate. And so I transitioned from networking, and I'll leave that to them, to now everything that I do is centered around effective networking. And so when I talk about networking, I'm not talking about going somewhere and handing someone my card, heading back home and saying, yeah, man, I really networked. I came back and I've got 47 cards, really effective networking. I'm talking about, that piece is necessary, but that's just the start of a networking and developing and maintaining relationships. So I'm talking about, following that up with, a one-to-one Zoom, following that up with, let me take you to coffee or lunch or breakfast, and just maintaining that relationship. And really, I think networking, I think of networking as dating, right? So you're trying to figure out, who are you compatible with? What skills might they bring to you in a potential collaboration or partnership, and what might you have that might be beneficial to them? And so you go through this process, lots and lots of first dates, and then you figure out who's worthy of a second date, who did you have chemistry with, who not so much, so therefore no second date. That's what I think about when I think about networking in the world of commercial real estate. And so I think I'm a much better, much more effective networker today than I was throughout the entirety of my 20 years in corporate life and in the early period of being a full-time real estate investor. So, and I'm bouncing around, but I'm going to keep going. So got rid of the 5-unit and said, that's the last small multifamily I'm going to do. So in addition to the multifamily conferences, the podcasts, the books, I also started putting my money where my mouth is. And what that meant for me was, after 20 years in corporate America, I had 2 legacy retirement funds, one with Pfizer, one with UCB, that I was now in a position of, well, do I just leave that money where it is, where it's currently allocated, and just let it ride and just hope that, the market does well and it continues to, whatever the allocation is, 60%, 30%, 10%, or 60-40 traditional stock and bond portfolio. But whereas when I was in corporate, I had the excuse that I don't have the time to, or the expertise to devote to managing my retirement fund. So I'm perfectly fine with just let so-and-so, follow his lead, put it where he recommends, and just let it fly. When the market's up, I'll open those quarterly returns. When the market's down, maybe I won't open those quarterly statements. Right. And so, I maxed out my 401k every year. That was a given. But I wasn't doing anything from an investment standpoint beyond that. And so one thing that I appreciated was that, I don't know what it's up to today, 22,000, 23,000, whatever it is that you can put away today, that that you should be doing as a minimum, but that should not be the start and end of what you're doing in terms of your retirement related investing. And so you've got to be doing more if you aspire to have more. And I aspire to have more. And so I talk a lot about creating generational wealth. And for me, when I talk about creating generational wealth, it's not simply what am I going to leave to my children. I'm trying to impact the lives of my not yet conceived grandchildren. And so when they ultimately arrive, I want them to come into a world and stand on a foundation where they're going to have opportunities and privileges that I will have been able to contribute to and shape before they even arrive. And so that's what I'm talking about when I talk about creating generational wealth. And to even start approaching that, it's you got to recognize that putting 22,000 a year into a retirement fund and thinking, okay, I'm going to work the next 30 years, and that may be enough for me to live off of in retirement. And we all know that the average life expectancy is getting longer and longer. I'm blessed to have a 98-year-old father who's still in good health, and God willing, is going to be with us for more years to come. And so, we're, as Americans, we're living longer, and so the idea of retiring at 65 and then for the next 15, 20, 30 years, living off what you've been putting into a 60-40 stock bond portfolio, that's just not realistic. You'll be lucky if you're able to live off of that, but you're not going to be able to create true generational wealth, at least generational wealth in the sense that I'm talking about. So then you get back to what else can you be doing? And I think probably everyone who's on the call has heard some version of 90% of the millionaires in the US have either made their money in real estate, or wherever they made their money, a substantial portion of their money is now residing in commercial real estate. And so it's a tried and proven and tested way of creating wealth. And so those of us who are blessed to have our own personal homes, we know that we can see what that equity appreciation can do for us in terms of our net worth, in terms of what we can do with that appreciation. When you think of doing more above and beyond kind of just your personal residence, that's when you start venturing into rental real estate and eventually commercial real estate and trying to do it on a bigger scale. So I joined an apartment mentoring program at the end of 2018, and I joined an apartment investing mentoring program for 3 reasons. One, I wanted to become a part of an ecosystem where I would have exposure. And again, keep in mind my dating analogy. I wanted to put myself in a position where I would have heavy exposure to potential prospective partners who had done the types of deals that I aspired to do, and who I could kind of associate with, and eventually through that dating process determine who am I compatible with and who might be a good potential partner. So that was number one. The second thing that I was looking for was a place where I'd be surrounded by and immersed with individuals who already were believers in investing in commercial multifamily real estate. So it's one thing to go to someone and say, "Hey, I've got a deal," and they ask you, "Well, why would I ever invest in a multifamily?" That's a whole different conversation than if you go to someone who already is a believer in multifamily in the commercial real estate space, and now you've just got to talk to them about the specifics of the deal or the opportunity that you have. That's a very different conversation than the newbie or the novice who has never invested in real estate, and you got to start really from ground zero, explaining all of the benefits and the whys and the pros and the cons. So I wanted to be surrounded by those types of individuals. So that was number two. And then third was kind of the basic education of the A to Z's of how do you acquire large-scale multifamily. And that was the least important to me, simply because no one has a monopoly on that blueprint. That blueprint is readily attainable. You can go out on the internet, you can find it, you can pick up books. I recommend this book, Real Estate, Best Ever Apartment Syndication book. I probably recommend this 2 or 3 times a week, by Joe Fearless and Theo Hicks. And as you know, Chris, that they have a daily podcast that they do. And I was, after listening to that heavily in 2017 and 18 and kind of tapering off over the last few years, I was blessed to be a podcast guest on that daily podcast probably a month or 2 ago. But I say all that to say the information about how do you do it is out there. Most people, the determining factor as to whether or not they're going to be successful in commercial real estate is not whether or not they have access to or they know the information. If it was just a matter of knowing the A to Z's of buying a large-scale multifamily community, everyone could do it. The
Right.
biggest differentiator between those who are successful and those who kind of fizzle out after 3, 6 months, 9 months, maybe a year, and they give up and they go back to whatever they were doing or they move on to something else. The biggest factor is not that they lack the knowledge of how to do it, but they held the wrong mindset. They did not have a mindset that was conducive to whatever their objective was in the commercial real estate space. And so I talk to people about the importance of mindset. And in those early days, when I decided at the time, I think I paid $25,000 to join that mentoring program, which, to me, that was a decent amount of money. But I had a mindset of, I'm okay with making this investment in myself because it's not a matter of whether I'm going to be successful. It's a matter of when I'm going to be successful in becoming a multifamily syndicator. So we've all been in scenarios where they say, look to your left and look to your right. Remember my freshman year in college, they said, look to your left, look to your right. There's a good likelihood that the person that you're looking at will not be walking across the stage with you 4 years from now. And everyone looks and they're like, oh man, I feel bad for that guy or that girl, but I'm graduating and I'm doing it in 4 years. Well, I had the same approach to multifamily syndication. So as I'm kind of in that ecosystem, I'm like, here's my 25,000. I feel very confident in giving that to you because failure is not an option. I can't define how long it's going to take me to be successful, but I know I'm going to be successful. And that 25,000 is going to come back to me many times over. If I do one deal of the scale that I'm trying to do, that $25,000 the ROI on that is going to be really, really good. And so that was my approach. That was my mindset. So I made my first offer on a large scale property, a 92 unit in spring of 2019, a property here in Atlanta. I've probably been in the mentoring program now at this point in time, maybe 3 months. I put in my first offer and turns out I was a runner-up. Someone wanted to pay $300,000 more than we did. I was like, okay, that's fine. I'll get something in a month or two. I'll land my first property. So fast forward to summer of 21, we're in the midst of COVID. That's when I landed my first deal. So it took me the better part of 2 years of underwriting, touring properties, establishing relationships with brokers, property managers, tax consultants, all of the players that you need when you're kind of rounding out your team and trying to break into this space. Submitting offers, being in best and final. I joked that I was a bridesmaid, but not a bride for a long period of time, wondering when is someone going to pick me. It's important for people, especially if you're early in your journey, to know that everyone's journey is going to be different. I know people that got into it and 3 or 4 months in, they found themselves associated with a deal. And God bless you if that's your experience. That was not mine. My experience was trying for 2 years, finally breaking in, and I landed that first deal in the summer of 21, a 244 unit. We acquired it for $30 million. We raised $8.25 million in equity. The week that we closed that deal, I got a call from Cushman & Wakefield saying, congratulations, Clive, you've been awarded this 200 unit, $40 million deal. We ended up closing that 3 months after closing that first deal. So some of you may follow and listen to Michael Blanc, but he probably is the biggest person or guru associated with the law of the first deal. And the law of the first deal says your first deal will be the hardest, most challenging, and it will take the longest for you to wrestle to the ground and close. But once you close that first deal, your second deal and your subsequent deals will come more quickly. They will be easier to take down. And that was exactly my experience. So after knocking on the door for 2 years, I literally, not even after closing that first deal, I'll tell you a quick funny story. So after getting awarded that first deal, I happened to be in Dallas. I live in Atlanta. I happened to be in Dallas at a conference. I did the buyer call with the seller and the brokers. I was in a hotel room doing it on Zoom, and there was some back and forth. And eventually, they came back and said, "Congratulations, you've been awarded the deal." So a really big celebratory time after 2 years of knocking at the door. I arrived back in Atlanta Monday or Sunday, and Monday I got a call from a broker at a large established brokerage firm congratulating me on having been awarded this deal. Now, this deal was not with his brokerage firm, but it's a small world, and again, the importance of networking. He had learned in a matter of a couple of days that I had been awarded this deal. And after 2 years of me being in dialogue with this person, he says, "Clive, I have two off-market deals. They're not yet public. We have a broker opinion of value, a BOV, but there's no offering memorandum. But if you're interested, I can send them over to you. You'll just need to sign this confidentiality agreement." So I'm scratching my head saying to myself, we've been in discussions for 2 years. You've never shared with me an off-market deal for me to take a look at before it's been made public. And he wasn't just sharing it with me. I'm sure he was sharing it with a dozen or 2 dozen of their closest clients. But what that told me is that the law of the first deal was kicking in for me even before I closed the first deal in that particular example, because he's now saying, okay, Clive has a whiff of validation to him. He's been awarded a deal. And so that law of the first deal is real. And I'm sure when we got that second deal, a Cushman and Wakefield deal, I haven't asked them, but I'm pretty sure that when they did their due diligence, because they never want to put in front of their client, the seller, they never want to put in front of their client a buyer who hasn't been vetted, or they have any reservations about, can this person close this deal? So I'm pretty sure that they probably reached out to the broker of the first deal that I got, and they probably said something along the lines of, how's Clive to work with? Give me a sense. Is it, is he difficult to work with? Was it a smooth transaction? Trying to get some sense of what kind of deal experience would they have with me if they awarded me a deal. And so, again, the networking, the reputation, it's not only that you close the deal, but it's how you close a deal. You can close a deal kicking and screaming, fighting tooth and nail for over every dollar. Or you can be someone who's cooperative, easy to work with, who's going to make their lives easier. That's the type of reputation you want to develop as a multifamily owner. So it's not just have you closed the deal or did you close the deal, but it's what's the experience that all of the players had in working with you as a buyer. And so every seller is going to they're going to turn to their broker and say, who are these buyers that you're suggesting that we award this deal to? Who are they? What gives us good comfort that they can close this deal? And kind of what's their track record? And so every selling broker wants to be able to answer those questions with confidence. And in my case, he was able to, and I'm sure they got the question from their client, he was able to say they just closed a deal not too far from our deal. It's 30 million, so, in the ballpark of this $40 million deal. I spoke to the brokers over there, and he was easy to work with. I don't know whether those conversations happened. I wasn't a fly on the wall, but I'm sure if those discussions took place, that they were able to provide positive feedback to their client, the seller of that second deal that I had. So again, law of the first deal played out. I'm going to fast forward to kind of more current times and kind of update on what I'm doing now. Um, at the end of June, June 30th, we closed on what's the largest transaction that I've been involved in. We acquired a $77 million 2021 constructed Class A asset in Northwest Arkansas, in a place called Rogers, which is adjacent to Bentonville, Arkansas, home of Fortune 1, Walmart, that everyone is familiar with. We acquired that. It was a HUD loan assumption that we closed on, 3.49% fixed rate deal assumption. Had we tried to put new debt on that deal, it would have probably been about 7% and may not have been a deal that penciled for us. We were able to take that deal down. We raised 38 million in equity. And we did it in the environment that we're in over the last 6 to 12 months. And so I'm really proud of that transaction. In addition to the 295 units, there are 18 triple net retail spaces on the ground level of that property. And so not only do we have 295 units of multifamily residences, we also have 18 retail spaces. And so it's a great transaction. Like I said, it's the biggest one that I've been involved in. I will readily tell you that like each of the deals that I've spoken about thus far, they were all team efforts. They were all taken down by teams that came together to raise the capital, to manage each of the different components that you need to do when you're working on deals of this size. And so none of what I'm talking about is Clive being a solo, star operator out there doing this on his own. I've been blessed to partner with the same core team on each of the deals that I've done. And I've learned and I've observed that that's not common. I see a lot of one and done teams. They come together for one deal and then they go their separate ways for their second or their third deal. And so I've been blessed to have the same core team. We may have supplemented that core team to get deals done, depending on the size, like the one I just mentioned, but the same core team is working on these deals. I want to pause there before I get into the development stuff that I'm doing. There may be questions, so I'm going to stop and give you a chance to redirect me, Chris.
Yeah, no, Clive, I think you hit on so many amazing points. Many things that if it were just a direct interview, I would have asked you these questions anyway, right? Everything from your corporate America journey, talked about from going from single family to multifamily. What are the essential elements of when you are a multifamily investor? You're not an N of one. There are other players that are involved in order to make these investments successful. Property management, the team, the amount of time that you stress the team and network around this conversation, I think should be a really important point for folks to pick up on that I want to make sure gets reinforced. You talk about investing in yourself. I'm a big, and I know like I'm a part of Michael Blanc's coaching program. I've been in Brad's coaching program and mentorship program of, learning so many different things. I would tell you in terms of that coaching and mentoring, that work that is available there is it's just remarkable. Investing in yourself. Tony Robbins, I know, talks a lot about that. I follow a lot of Jim Rohn, his teachings, and investing in yourself to be, to be the best you that you can be. I think are all so many great things. One thing I wanted to do before you go into what you're up to now beyond the project, I think it was Pinnacle, if I'm not mistaken, that I said.
Yeah, Pinnacle Heights.
So,
yep.
It's amazing. The journey that you've gone on in terms of the books, the podcasts, the YouTube videos. I tell people all the time, like, this is This is a very common story that you'll hear around the individual that chooses to come into this skin state. They happen upon these things sometimes, and then all of a sudden, it hits them square between the eyes, and they're deep down the rabbit hole, as they say, to come out to where you are today. So yeah, please tell us a little bit about that development project that you're working on. How did it come about? Your vision about that. Maybe spend a few minutes on that, and then before we wrap up, we have a few questions that we ask every guest that comes on to the meetup, and I want to be able to ask you as well, so that the guests can, our listeners can get a chance to know you a little bit more beyond what you've shared today, and we'll take it from there.
Yeah, so I'm actually involved in two development projects, one heavily involved in and one more lightly involved in. So I'm going to talk about the one that I'm more heavily involved in, and there's a lot more activity around it. We just actually received our land disturbance permit. And so before I get into the specifics of it, I'll tell you how I found myself to be involved with it. So I always knew that development was kind of a natural extension to take me beyond kind of the traditional just acquiring existing multifamily assets. So I always had an interest to kind of get into development, but I didn't necessarily know when that was going to happen or how that was going to happen. But all roads lead back to networking. So the way that I came to get involved with the development opportunity that I'll speak about, is a mutual friend of mine, someone that I met through networking, actually an investor in one of my deals, one of the key principals in one of my deals, introduced me to someone. We went out to lunch. I took this person out to lunch. She ended up introducing me to my now business partner on this 90-acre development that I'm doing. She said, "Hey, Clive, you should really meet Dominique. This is Dominique Love. She's this powerhouse woman who started the Atlanta Food and Wine Festival. She's done all of these great, amazing things. Her latest project is this culinary-centric community." And said to her, "Hey, Dominique, you should meet Clive. He's this great guy. He's doing lots of things in the commercial multifamily world. You guys there may be some synergies there." So I met up with Dominique over a lunch. We hit it off, and at the very first meeting, I said, "I don't know where this is going, but at a minimum, I want to have a home site within the community that you're developing." My wife and I, we then went down to Serenbe, Georgia, which is the area adjacent to the development and also where my now partner lives. And we had brunch with my partner and her husband. And again, we left that saying, "I don't know where this is going, but at a minimum, I want a home site in the community." Again, it wasn't just an exchange of business cards or we'll go out for coffee and then you don't do any follow-up. We stayed in contact. She ended up parting ways with some folks who she thought she was going to kind of move forward with, and ended up coming back to me and saying, "Hey, Clive, I think we should do this together." And we were off to the races. And so that was about 12 or 13 months ago. But what's really interesting is in March of 2022, my wife turned 50, and so we had an in-town staycation in Serenbe, Georgia. So Serenbe, Georgia, for those who don't know, is a wellness community. It's about 30 minutes southwest of Atlanta Airport. Atlanta Airport is the world's busiest airport, as everyone's probably heard. But they have this wellness community that's often this rural community, but there's kind of an oasis of high-end homes in the midst of cows and horses and just kind of rolling hills. And that's where my partner lived. And so I took my wife there for a 4-day spa, yoga, pampering, hiking, 4-day getaway. During one of the hikes, I came across this vast, expansive land, And I said, I wonder who owns this. Someone should really develop something here. This is like a great site. It turns out that my partner, who I didn't know at the time, hadn't yet been introduced to, she acquired those 90 acres 4 days after we left our 4-day staycation. And subsequent to that is when we got introduced. And I'm like, hold on a second. Are you talking about this land? I was on that land. And she's like, yeah, I closed on it 4 days after you guys were there. So there's some serendipity, whatever you want to call it. Our worlds came together and we've been partnered in this 90-acre development. It's it's going to be 77 homes. About 20 of those will be townhomes. About just shy of 40 condo apartments. And all of this will be for sale, not for rental. Above the 40 condos will be above about 50,000 square feet of commercial retail space. And in the last few months, we just secured the rights to an approved 50-key boutique inn that will be on the 90 acres. Originally, the seller had retained the rights because he thought he was going to develop it or turn it into an executive center or something. We were actually doing more in furtherance of it actually becoming an inn than he was. And we just approached him and said, we made him an offer. And so we now have the right to acquire that. And so while we're not going to develop it, we don't want to become hotel developers or boutique inn developers. We're meeting now with prospective hoteliers who will take it and develop it, and we'll kind of figure out what that JV looks like. But it's an expansive, I think the total capital stack is just shy of 150 million. It's a huge development for it to be my first, but all roads lead back to networking. But for the networking that I've emphasized throughout this, that opportunity would not have presented itself to me. And, again, we're looking at breaking ground potentially in Q1. And just in the last week or so, we received our land disturbance permit, which is kind of the last hurdle before you can put a shovel in the ground. We're still wrestling and deciding on our final equity partner. And what's important to us is not just who has the equity or capital that we need. We actually have a vision for replicating this community or this model of this culinary-centric community in 8 other locations around the country. And one of the locations happens to be in Northwest Arkansas, which is where we closed on Pinnacle Heights, the $77 million deal that I mentioned. And that's one of the areas that we've identified as being a good kind of fertile ground for that type of model that we are looking to do here, first in Georgia, and then again, replicate it elsewhere.
Incredible. Clive, man, I mean, it's remarkable. So you said serendipity or, God making connections, all those types of things, but however you want to view it, I'm a faithful person. So I'd like to think the latter, that these connections were made. I think it's absolutely remarkable. Look, I know that we're coming up on time. I want to make sure that we do a couple of things to first allow some of the guests to ask questions. I know there may be some questions out there. So let me ask anyone, if you have a question, please take yourself off of mute and ask your question directly. If you don't want to take yourself off mute, you want to send in the chat, I'll go ahead and read it out. But please go ahead. I see you taking yourself off mute.
Yeah, I was going to ask, what did the mentor program offer you? Other than guidance and a network, what were kind of like the details of that, especially because I'm graduating next semester, so next May, and I'd definitely be interested in something like that. I don't know about spending 25 grand, but right away.
Well, I can tell you today that costs 35 grand. So I've seen anything between 25 grand and Grant Cardone, I think, is charging 50 grand. And the interesting thing is you're not going to work with Grant one-to-one. You're not going to work with Brad one-to-one. These bigger gurus that now have hundreds or thousands of students, you're going to be assigned someone who you can kind of reach out to periodically. But basically, all of them have some version of, they have some modules that you'll be expected to go through. And then you'll have access to a successful student who's kind of become a coach. And to the extent that you're pursuing deals, that's the person you're going to reach out to say, hey, here's my underwriting. Give me some feedback. Or I'm going to be touring this property. What questions should I be asking? So basically, you're just leveraging their experience so that you can be effective in your pursuit of your multifamily related goals. And so it's going to be some version of that, but I would not underestimate the importance of being around other people who are already believers in multifamily, investors in multifamily, and also that being a ground where you might find your business partner, not romantic, but your business partner. Or partners, because again, most of these deals are going to be multiple partners, not just kind of two people.
Gotcha. Interesting.
Great question. Again, investing in yourself, and I think those are the great things about it. The program, there are different programs that are out there, the networks, the community, the giving that people provide when they're in these communities, whether it is new investors or more seasoned investors like Clive. That's the type of network and environment that you get to be in and learn and grow and ask questions and all those different things. Pick up. And if you think about it from the investment standpoint, the idea is how are you able to accelerate your progress faster? That's the name of the game. And the idea of could you continue down the journey of what Clive and I have done, listen to all the books and all the podcasts and go down all the YouTube, or could you provide some more structure around that, invest in a system and in a network to help you go further faster? Those are the type of things that you'll have to make that decision as you come along this journey. But it's a great question, and one that I know you'll work through as you're evaluating your options here. There is a question in the chat. And the question is, are your first set of investors and team members now anxious to do deals number 2 or 3? I guess that's probably in light of the environment, the economic environment that we're in. I mean, I know you just talked about how Pinnacle Heights was done in this economic environment, how you were able to secure, very attractive fixed interest rate loan through a loan assumption. But maybe there's a little bit of questioning there around the environment and the why behind investing in real estate today in this market. There's war going on. There's war in Ukraine, war in the Middle East. There's doom and gloom according to the media around what's happening. Why, Clive? Why are we investing in real estate today?
Yeah, so I actually think that this is probably, whenever there's a recession or a downturn or something going on that is negatively impacting the macro economy, there are always deals to be done. And some of the better opportunities will present themselves in times of downturn that weren't necessarily present at a reasonable price when everything was going up. And so anyone who's a newbie now, it would be exactly the wrong time for you to say that, the economy's down, cap rates are up, interest rates are up, it's really challenging. I'm going to wait until things improve before I get in. That's the wrong approach, and you got to kind of address that and recognize that we've actually had a 13-year bull run in the multifamily real estate space. So if you got into multifamily in 2004 15, 16, 17, 18, pretty much you had to go out of your way to mess a deal up. You know, you could be a mediocre operator and your deal's going to do fairly well. It might do better if you were more skilled, but your deal's going to do well. We're not in that reality today. You got to be very thoughtful, and you got to have a lot of confidence to invest with someone today, because the waters are choppier. You know, it's not just kind of a steady, you know, calm body of water. It's choppy and getting choppier. So why would you invest in that environment? Because there were going to be opportunities. You've heard Rod Khleif talk about get ready because there are going to be opportunities coming. You know, and he you know, had a monster single family portfolio. I think he talks about having lost $50 million, you know, at one point in time. So he's lived through kind of downturns. He's lived through the Great Recession. Real estate, from my standpoint, we have the supply and demand imbalance that we have in this country, and it's not just confined to this country, but the supply and demand imbalance that we have, where we have I've seen estimates between 3 to 5 million fewer housing units than we need. And instead of that gap shrinking, that gap is in fact expanding, because every year that we fail to do, I think it's something like 1.3 million housing units. Every year that we fall short of that, we're not keeping pace with new entrants into the housing space, new demand for housing. So that gap is growing. And so my position is that until we address that, and we're not going to address it overnight, it's not going to be addressed by this administration or the next administration. That's something that's, you know, 10, 15, 20 years before we can start really addressing that. And so therefore, if you get into rental or investment real estate and you buy right, even if the macro economy is not at its heights at that point in time, you know that the general valuations of real estate are going to go up over the longer term. So if you're not kind of a short-term flipper where you're going in and you're trying to, you know, realize an exit within 12 months, if you're more of a longer-term buyer, you know that over the long term, real estate has proven itself to be a solid investment. I mentioned the 90% of millionaires earlier in this conversation. And so going back to that Arkansas deal that I mentioned, 38 million. So my first deal, we raised $8.25 million. My second deal, we raised 13 million. And so then one of my partners says, we're going to raise 38 million for this deal. So one, we need a bigger team, but also we're not in the glory days. We're not in the uprise of that 13-year bull run. We're now in a period where people are starting to be more cautious, more risk averse. So it's harder to raise capital. And so we're blessed to be able to raise 38 million because there are still good deals to be had. You just got to find them. And so in a climate where interest rates are rising and you're going from kind of unprecedentedly low interest rates to now interest rates have climbed, you know, 500 basis points over kind of a 12-month period, we found a deal where we could still do a deal fixed rate, 3.49%, with almost 38 years of term left on that deal. So there's always opportunities. They may be harder to find, but you can't put your pencil down and say, you know, the economy's down and interest rates are up, I'll wait until things get good, because there are millions of others who have that same approach, and those are going to be the competitors that you're going to be competing for deals against, and competition is going to drive values up. And so that would be my long-winded way of answering that question.
Great stuff, man. Well, look, I'm gonna jump to the question round. There are 4 questions that we love to ask all of the guests, expert guests that come onto the show. to just get to know them a little bit better. Excuse me. So, are you ready for those?
I guess so. Hit me.
But you're not ready or not. Here we go. So, look, we love to travel. I love to travel. My family, we love to get away. We did a great trip to Greece this summer, and traveling around. It was incredible.
I saw those pictures, Chris.
Oh yeah. So one of the things that I love to understand is just what about you? What is one of the best trips that you've taken and why?
Oh, that's easy. So, because I put out a post on Instagram and other socials about a week ago. It was a video of me answering the question, "Where's the best vacation that you've ever taken?" So mine was Phuket, Thailand, and it was at the Banyan Tree Resort there. And this is back in 2000. I happened to be living in Hong Kong. I was still at that law firm that I mentioned. I was working out of their Hong Kong office. That's how I came to be living there. Instead of working out of the New York office, I was working out of the Hong Kong office. So we were able to, at the time, it was my wife, me, and our only child at the time, who was a toddler. And so we basically ended up living in Hong Kong. So the office, they had a office trip to Phuket, Thailand for the weekend. So it was like a 3 or 4 day weekend. And I love Thai people. They are some of the most warm and embracing people. And you feel that. I felt that. The climate it reminds me of the Caribbean. My family's from the Caribbean, from Jamaica specifically. And when I was in Thailand, I felt like the climate feels like I'm in the Caribbean. And the drink that they served us when we checked in was a hibiscus, which we call sorrel, but it's a drink that's popular throughout the Caribbean. And so it was just a phenomenal vacation. We had a really nice villa with a private pool, sunken tubs, private dining area where they would bring meals to us. It was just off the charts. And I had not experienced luxury of that scale, and I have fond memories of that experience. That was my first couples massage that I had done. And once you get a proper massage in Thailand, anything else is going to pale in comparison when you return to the US or wherever you return to. You're going to be like, it was okay, but it wasn't the massage experience that I had. And that was literally my first massage. And my wife was laying there. I'm laying there. We're doing a couples massage. And they're rubbing powders and kind of yogurt and all kinds of stuff. It was just off the charts. So that's my answer.
That's awesome. No, that's awesome. And when I think about Phuket, unfortunately, I always get drawn back to the tsunami that occurred. But you painted a picture of what it was before, and I don't know it's recovered now, but it's beautiful, and it is definitely something that I'm going to add to my my list. That is sounds like an incredible vacation. So you talked a little bit about one of the deals that you're more heavily involved in. We talked about what you're involved in already these days. Maybe you want to spend a little bit of time just sharing a little bit about the other project that you were working on, so that people can have an understanding of that other project as well.
Yeah. So the other project is on a similar timeline in terms of breaking ground. I think that it's also looking at breaking ground in Q1, but that is more of a traditional. It's a multifamily mid-rise development, 142 units. And how did I get involved with that? Again, all roads lead back to networking. In the acquisition of the land, the primary sponsor of that deal had a gap to fill. And I was one of the people that he reached out to in connection with, we need X amount of dollars to close the acquisition of this land. And that's what got me in the mix. And so I have a LP interest as well as a general partner interest in that deal. And I did that primarily because I was like, this is interesting. This will be a great way for me to shadow an experienced developer and kind of, tag along and see how development is done, so that when I get to do my own development, I'm going to have the benefit of that experience. So that's how I got involved in that. It's here in Atlanta, west of Georgia Tech. It's about a block off the Beltline, which is kind of surrounds Atlanta, and is a lot of development is happening around the Beltline.
So, last two questions. What does financial freedom mean to you? We have the name this this show is wealth mindset and real estate investing. I always like to understand what people have different ideas about this, and I know, like this idea of financial freedom was something foreign to me once I stepped into the space of commercial real estate. But what does financial freedom mean to you?
Yeah, so financial freedom, the core of it is freedom, right? And so for me, that freedom enables you. I had a former colleague who would say, he would use the term FU money. And what he meant by that is having enough money such that you are able to do the things that you want to do with the people that you want to do it, when you want to do it, without asking permission. And so that resonates with me. And so when you leave kind of a 20-year corporate career, one of the things that I was trying to do was to reclaim my time. When you are an employee, however, regardless of how well compensated you are, your time is owned by someone else, and they are literally paying you for your time. And so for me, freedom was about, how do I reclaim my time and then distribute and spend my time in the way that I want to, and not the way that is necessarily how someone else wants me to, or beneficial to some company. And so that's important to me. So there's a financial component to it, but for me, there's also a impact component to it. So one of the things that I say, kind of beyond creating generational wealth, which is largely going to benefit my family and my offspring, I want to impact, my goal is to impact thousands of people that I may never meet. When you have the financial freedom, you can choose how you're going to make that impact, where your impact is going to be. And so it's the financial component. And then, as I said in a recent social media post, money is a tool. But it's really, the important thing is, what do you do with that tool? Just having the tool by itself, is just having the tool by itself. But if you can use that tool to build something that's then going to benefit someone, now you've leveraged that tool in a way that's going to have an impact well beyond you. And so I want to impact folks with the freedom that I'm able to gain.
Absolutely. And I have to give a shout out. You have a couple of fellow Jamaicans on the line here, myself, and I know my province actually on the line as well. And we have the Caribbean connection. So when you were talking about those things, it definitely would resonate with me for sure when you're time back in Thailand. Last question for you. What does having a wealth mindset mean to you? You talked a lot about mindset in that journey that you went through and transitioning to where you are today. I mean, you can see it, you can hear it, you can feel it. What does having a wealth mindset mean to you?
At the root of that is an abundance mindset. So you can have a scarcity mindset, and that's going to be very limiting. And that's going to be an impediment to you kind of achieving anything meaningful in this space. Or you can have an abundance mindset that says, I can be successful. I deserve to be successful. Sky's the limit. And whatever problem there is, I just need to figure out the solution to address that problem. And so it's really about abundance. And I started out by saying, if you don't have the right mindset, I can tell you the right books, podcasts, conferences to attend. It's going to be all for nothing, because without the right mindset, if you go to conferences or if you go into, you know, trying to partner and network with folks, and you have a mindset of what you don't have, or the deficiencies that you have, or the limitations, as to why you know it's going to be difficult for you to be successful, you've already pretty much defeated yourself before you've even started on your journey. So you've got to go into it with this is, others before me have done this. This is not rocket science. It isn't. If you can do basic arithmetic, you can be successful in this space. And if you've got a personality that you can kind of marry with that kind of basic arithmetic, you can be successful. So again, it just comes down to an abundance mindset. You got to believe that you're deserving. If you don't believe you're deserving, don't even get off the bench.
Absolutely love it. Well, what I want to make sure that we can do is give you an opportunity to tell those that are on the line today, listening in live, and to everyone that's going to be watching the playback and the recording, how can they get in contact with you? Where should they go? How can they get that access to your newsletter that you publish that is just awesome? Tell us a little bit about that so that everyone can get that. And of course, I'll send that out to the network.
Yeah, so I'm active on social media, Facebook, Instagram, LinkedIn, but the easiest way to get a hold of me, to sign up for my newsletter, to book a Zoom meeting with me, all of that is best found via my website. So if you go to parkroyalcapital.com, you can sign up for my newsletter there. You can obviously see more about what I'm doing. Some of my podcast appearances are on there. If you Google Clive Davis and multifamily, you'll probably find a bunch of things that way too. But the best place to connect with me is parkroyalcapital.com. That's my personal business website.
Fantastic. Well, Clive, I want to just thank you again for the time that you've given us today to share your story, share your journey. Provided such great value for myself and for those on the line. I can't thank you enough. I look forward to being able to collaborate with you here in this forum, and of course in the fields that we play in this real estate game. And look forward to building with you. I appreciate you, brother. So thank you very much.
Thanks again for having me. And for everyone who's joined us this evening, I would just say, just define what your goal is and go at it like someone stole something from you.
Absolutely. Thank you, everybody. Have a great night.
All right.